All right, you beautiful people. Hope you're doing good today. It's Friday, October 3rd. Great to have you. So let's take a look. Hey, if you're a trader and struggling with profitability or struggling with drawdown or struggling with finding your edge, get in touch with me and let's take a look at BOSA. BOSA. We like to trade spreads. You ever traded a spread? Actually, you probably have. A spread is just going long and short in different instruments. And what we did today is we went long in the natural gas market and short in the heating oil market. These markets are somewhat correlated. They're not tightly correlated. They're loose. Loose gives us a little bit more profit opportunity. I got in a little late here in the day. We're taking a look at about 11:15. I like to trade earlier in the morning. But the spread here for the natural gas heating oil market had taken a big dive down about $900 away from its center line. So the yellow line is the center line. This is the third band. This green line here is the third band away from that center. That's about $900 in equity difference. Now, if it had gotten down to the red line, that is, well, it actually got between this green dotted line and the red line. That's a buy zone right there. That's telling us that historically, that's about as far as this market moves during this time of day. So between the green dotted line, you can just see it's right over that level against here. This is a prime buying opportunity. The spread expectation is these dotted, this little dotted plot here. That's where the spread normally trades during this time of the day. So we've got a nice divergence. A divergence between what it currently is at and what it's expected to be. And so we're oversold. We're expecting it to be higher. Go ahead and I went long on a little, basically a move up off of that $900 line. Went long. I was up 500 bucks. It hit this resistance. Should have gotten out. I was targeting the midline. That's our normal target. It weakened up and I got out with about a $260 gain. Here's what it looks like on each of the component instruments. This is the natural gas long that we took. So I went long here and I exited out right at that point. So that was up $120 on one contract. Let's make this a little more readable. 120, actually it was probably a little bit higher, right about there. 100, yeah, 120. So I won on the long leg and I also was a winner on the short leg. Sometimes that happens. We're up 134.40 on going short here on the heating oil market. Worked out great. Took a little bit of heat, not much. I think it was a maximum drawdown was let's say about 100. Yeah, it's about 100. So that was about it. $102 before we hit the $500 max, and I got out there at about 250, I think. So that was our trade today, 254.40. Yeah, that was our profit. The only trade I took today. But look at this. Check out the silver gold spread that I missed this morning. Here is, let me do a quick refresh. Here is the long silver, short gold spread. Uh, kick myself for missing this one, guys. Was watching it right up until the 9 o'clock hour, and then I turned away. I had some other business to attend to, and right at 9 o'clock, the market did a nice strong move. Silver sold off in relation to gold, and then gold, I think, went long. Let's see if it wakes up here after the restart. It's coming. Now, I also was looking at one of the markets I like to watch too is lean cattle, live cattle, and lean hogs. Here is a great short opportunity. You can see the spread dots. They're expecting the expectation is to be down during the open. This is right at the open at 9:30. A move up and then a reversal downward. So this reversal started here a little bit early. You can see a nice rising in the expectation. Market did move up, it petered out, and it tanked here. Again, the expectation was to peak out a little bit later, but it definitely did a nice move to the downside. Okay, here is that uh, silver and gold spread. It was just hovering up here, just waiting to drop. 9 o'clock hit and the market did tank. This is a move of over $1,800. Not a bad move. The silver contract only gained 750 of that 1,800. So it was about about $1,000 move in gold in the opposite direction. I don't have a gold chart open, otherwise I'd have you look at it. But beautiful break of an overbought condition. Again, the spread dots are kind of in a positive bias here, which isn't as encouraging. But what is important is we were dancing right inside of this red to there's red dash lines here, dots you can see here, and I believe the red dash lines were right at that area. Yeah, if you can see that. Again, this is an overbought block. This little channel up here is overbought, and it certainly was. The red line on top shows us that this is the highest this spread has been in the last 9 days. So it's a little bit more significant when it gets to that red line. Again, if it's above the dotted red line up there, we're good to go short. Solid break downward and a move of $1,800. And I just started looking at the natural gas gasoline market, natural gas versus RBOB gasoline. That's going to be on our radar. Here is a look at RTY versus the YM. Strong tendency to be down here, and we were in our overbought condition. Right up here is our overbought barrier, and it certainly took a downturn here. So the expectation was to be down the whole day. You see that the red dotted lines, our expectation is downward, and it certainly has been downward the whole day. All right, so that is where we're at with our take a look at the spreads. Guys, if you have any questions about it at all, feel free to drop me an email. Look forward to hearing from you.